Today, we're going to take a deeper dive into the recent collapse of the Silicon Valley Bank, also known as SVB, and examine the insights provided by Tucker Carlson's recent segment on the issue. For those who may not be familiar, SVB was a major player in the tech industry, providing financing and banking services to many successful tech companies. However, on March 8, 2023, the bank announced that it had filed for bankruptcy, sending shockwaves through the startup community and leaving many wondering what went wrong. Tucker Carlson, a well-known conservative commentator and host of his own show on Fox News, recently weighed in on the issue, arguing that the collapse of the SVB is a symptom of broader problems in the tech industry. According to Carlson, the tech industry has become too focused on short-term profits at the expense of long-term stability. He argues that many tech companies are overvalued and that investors have been pouring money into these companies without fully understanding the risks. This overvaluation has created an environment where companies are incentivized to take on large amounts of debt and rely heavily on investor funding to keep their operations going. This, in turn, has created a situation where a single bankruptcy, like that of the SVB, can have a cascading effect on the entire industry. Carlson also points to the role of the Federal Reserve in creating the conditions for the SVB collapse. He argues that the Fed's policies of low interest rates and easy money have encouraged risky behavior in the financial sector, leading to the collapse of institutions like SVB. The argument here is that the low interest rate environment has made it easier for companies to borrow money, which has led to an explosion of debt in the tech industry. This debt has become a ticking time bomb, with companies becoming more and more reliant on investor funding to keep their operations going. The problem with this situation is that if a major player like SVB goes bankrupt, it can create a domino effect that could bring down the entire industry. This is especially true in the tech industry, where many companies rely on a handful of banks for funding and support. So, what can we learn from the collapse of SVB? According to Carlson, the lesson here is that we need to take a more long-term view of the tech industry. We need to focus on building stable and sustainable businesses, rather than chasing short-term profits. This means that we need to take a more critical look at the valuation of tech companies and the funding they receive. We need to be more cautious about investing in companies that are heavily reliant on debt and investor funding, and we need to focus on building businesses that can weather economic downturns and remain stable over the long term. In conclusion, the collapse of the Silicon Valley Bank is a significant event that has sent shockwaves through the tech industry. Tucker Carlson's segment on the issue provides an interesting perspective on the broader problems facing the industry and offers some valuable insights into how we can move forward. While there is no doubt that the tech industry will continue to face challenges in the years to come, we can take steps to ensure that we build a more stable and sustainable industry. This means focusing on long-term growth and stability, rather than short-term profits and rapid expansion. Thank you for watching, and I'll see you in the next video.